Welcome everyone to our weekly Forex market analysis call, and this is in preparation for trading for the week of September 18th to 22nd, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investment needs, I recommend you talk to your investment advisor. Okay, as usual, we will start off by taking a look at our Forex factory and see what's coming up. So the big thing for last week, the huge thing that happened was that Bank of England raised rates. So we've been talking about central bank policies for quite some time now, and the impact that this happens on, sorry, I'm so sorry, they didn't raise rates, they talked about raising rates. Okay, so Canadian Bank of Canada had raised rates. As a result, we saw Canadian dollar go up. And Bank of England now is saying basically their inflation numbers are coming out better, the economy is doing well. And as a result of that, even Bank of England Carney came out and said that it's time that we have to start talking about raising rates. So they didn't actually raise rates, but they started talking about raising rates. And they also said that they need to cut back on the monetary policy. So anytime the central bank says that they're going to cut back on the monetary policy or they're going to start thinking about raising rates, that's a positive sign for that currency. Usually that currency will go up. Same thing happened from Bank of Canada a few months ago. They started kind of talking like that and then they raised rates. Now ECB has been doing that as well over the last couple months or last little bit here. They've been talking about cutting back on the monetary policy, cutting back on the asset purchase program. So all of that is positive for these currencies, and that's why we are seeing a lot of things kind of go up against the U.S. dollar. So U.S. has is kind of going through their own sort of political things, but on the other side, although they were the ones to raise rates at first, but because of everything else that's going on around in the U.S., around the U.S. dollar has not been as positive as some of these other currencies, because these are now coming out and saying that they're going to raise rates, which has a positive impact on the currency. Even just the talk of raising rates, as we saw with British pound, has a very positive impact on the currency. So keep that in mind as we see the central banks shift their monetary policy. We have had loose monetary policy for a long time now, for close to 10 years. So now it's time for all these central banks to kind of start thinking about cutting back on that, tightening the monetary policy, and start to raise rates. So that's what we are saying. This is something we haven't seen in the markets for some time now. So if you're newer to trading this phenomena, you may not have seen before, because before the central banks were cutting rates after the big financial crash, everybody was cutting rates. As a result of that, U.S. dollar dropped. Everybody, all these other currencies dropped as well because they were cutting rates. They were doing a lot of quantitative easing, printing a lot of money, putting a lot of money into the market. So we're kind of rolling back, or the central banks are rolling back those loose monetary policies. As a result of that, normally what happens is when the central bank raises rates, it's positive for the currency and negative for the stock market. So that's just kind of the overview. So let's take a look at what's happening this week in terms of what's coming up. On Monday here, not a ton of important information. We do have the CPI number for the euro here. CPI number, which is the inflation, always an important number, even though it doesn't show it as the red, but I would keep an eye on this one. And now Australian dollars, so monetary policy meeting minutes. So this is, again, very important. Australia has been one of those places they have not talked about raising rates, but they cannot be that far behind everyone. So at this point, any central bank that comes up, we are going to pay attention to what they have to say. So if the tone of these policy meeting minutes is positive, so if they talk about economy being good and all of that. So last time they basically said the economy is doing okay, but they are concerned about some of the things. So as a result of that, they're not going to raise rates, or they're not going to even consider raising rates at this point. So it was negative for Australia. So if the tone is positive, we are going to keep Australian dollar will stay the same, but once the tone starts to change, then that could become positive for Australian dollar. So that's what we are going to pay attention to. All right, so going into Tuesday here, we have building permits for the US. So important number, some of the important data here. Current account is the trade balance. This is what President Trump is so concerned about when he talks about, I think it was last week or I think it was the week before, one of the officials was talking about how a weak US dollar is actually positive for the US, and this is the reason why. Current account or trade balance. So basically what they're looking for is the exports, a difference between exports and imports. So when they're exporting more, it is positive for the US. So we are expecting, this is the number that we're expecting. So if the number current account is bigger, so they're exporting more, this will be positive for the US dollar. So even though this is not in red here, it is an important number. And this is why they want the US dollar to be cheap, because then they can export more, because people would want to want the stuff made in the US because it's not that expensive. But if the US dollar starts to go up, then the exports become more expensive, so they go down. So this number is very important to pay attention to. GDT price index is the dairy number for the New Zealand. So New Zealand economy is quite heavily dependent on the dairy prices. So when this number goes down, New Zealand dollar gets impacted negatively. So if it's a positive number, this will be positive for New Zealand dollar. However, this number just kind of comes in randomly during the day, so we just kind of need to keep an eye on it. Wednesday retail sales number here will be important for British pound. If the data keeps coming out positive for British pound, then the chances of them cutting back on the monetary policy or raising rates become higher, and that will push the market up. So big thing for Wednesday here is our FOMC. So Fed's fund rates, FOMC press conference here. So anytime there's a central bank, markets will become volatile, especially with the US dollar here. So the Fed is not expected to raise rates at this point. Before they were talking about raising rates, but right now, with everything that's going on from geopolitical standpoint and everything else, the chances are that they're not going to raise rates. It will be a big surprise if they do raise rates, and then it will be positive for the US dollar, but the market's not expecting an interest rate hike at this point, given the current situation. So what are we going to look at here? The important thing to pay attention to will be the tone of the central bank, again, the Fed, to see what they are saying. Market will be looking for direction from the Fed to see, are they going to continue with the interest rate hike, so the third interest rate hike? Will they come out and say that we are going to do an interest rate hike in December? The chances are they're not going to actually come out and say that, but they may give an indication that we are still on track for raising rates, and we are still on track to do 3 interest rate hikes this year, which will then the market will expect it to be done in December. And in that case, we'll see a positive impact on the US. But generally, it's not positive. So just keep that in mind. Every time FOMC kind of comes out, it's usually negative for the US dollar. That's not actually a causal relationship. It's just because of what they say. So that's what I would look at. If their tone is more hawkish, then US dollar is likely to go up. But if they say, we'll wait and see, the data is not coming out as positive, we'll keep an eye on the data, all of that will be considered as a negative tone by the market. And as a result, we could see the US dollar drop. And then further into the Asian session, we have GDP numbers. Again, GDP number is an important number here for New Zealand. And then we have another central bank. So we got 3 central banks this week here as well. So Japanese yen. So Japanese yen, we have seen some interesting plays with Japanese yen over the last a little while here because of Korea threatening launching missiles and things like that. So with the Japanese yen, if they launch a missile directly at Japan, that's negative for Japanese yen. But if they're launching missiles, testing missiles, but not directly at Japan, then Japanese yen, it was going up because then creates volatility in the market, creates risk aversion in the market. But over the last little while, market is becoming a little, kind of normalizing. It's not considering it as big a threat as when they first launched the missiles. So the last big missile they launched at Japan, market just sort of brushed it off. So keep that in mind. The things that are normally supposed to play out may not always play out because of the market sentiment. So now market has seen North Korea launch missiles, UN has put sanctions on them, but the situation is sort of, it's there. So everybody's kind of, or the market is kind of normalized to it now. So as a result of that, there isn't as big an impact from that as there was a few weeks ago when they first started launching missiles. So just keep that in mind. And then we have, of course, the policy rate is not expected to change. So if their tone is negative again, this will be negative for Japanese yen. So Japanese yen crosses may go up as a result. So the tone of the monetary policy statement is very important, not just the interest rate. And then, of course, we have the press conference. So it's just best to stay away from when there's a central bank announcement. It's just better to stay away from these guys. Or these crosses here. On Thursday, we have unemployment claims here, and we have the public sector net borrowing for British pound. PMI numbers on Friday here. PMI numbers are usually important. So manufacturing as well as the services PMI numbers will be important. Canada here. One of the things that central banks always want to see go up is the inflation. So because Bank of Canada has been raising rates, the inflation number becomes important because they want to make sure that they're not sort of killing the inflation as a result of interest rate hikes. So these numbers will be important. And of course, in New Zealand, we have parliamentary elections. Generally, it will only impact the New Zealand dollar. Like US elections have a bigger impact. And we saw the French elections had a wider impact, but New Zealand elections should be more only, they should only impact the New Zealand dollar. Okay, so let's move on to the charts now. We will start off with Euro US dollar. So for the past 3 weeks here, Euro dollar is sort of sideways. And the two levels we have to watch out for are 120.95, so about 2100, 1.2100, and in the bottom here, 1.1850 level. So it's a range-bound market right now going sideways. So the type of market behavior that I would be looking for is if price comes down here, I'm looking for a bounce to the upside. So once it comes towards 1.1850, looking for a bounce up. And so that could be a potential buy. And if the price comes into 1.2100, I'm looking for a bounce to the downside. The key thing to note here will be if the price breaks out of the range, and that's when we're looking for a breakout trade. Otherwise, I'm just going to treat this as a range-bound market. So let's say if the price, so right now, this looks like a bullish close, but within the range. So it's still a range-bound, but if the price breaks to the upside here above 21, so I'm going to look for a pullback into the 2100 and then look for a further move to the upside. And in that case, the target would be 1.2250 level, which is this next level of support and resistance. However, if the price breaks to the downside below 1.1850, then I'm going to look for price to bounce back into 1.1850 and then look for a further move to the downside. But until such time, I am looking for 1.1850 as a potential buy and 1.2100 as a potential sell opportunity. So trading this as a range-bound market. Going over to the British pound here, British pound has had a really good week. So we saw a big move up because of the central bank and the way the MPC members were voting. The overall tone was very positive for the central banks. They were very hawkish. As a result, the currency went up. So in this case, we're looking for a further move to the upside. There may be a pullback. So in terms of the pullback, I'm looking for this level here, 1.3450, and then looking for a further move to the upside. This is a good resistance level, so 1.3850 level will be the target to the upside. So it's looking for a pullback first, so potential buy opportunity maybe at 134.50. It could come down a little bit more. It has been very bullish, so keep that in mind, but if it does come down a little more, then we're looking at 1.3360 level here for a pullback. So over a shallower pullback, we'll just keep it at that for now, and then we'll see if it does do that. But for now, we are bullish on the British pound. Aussie dollar, this hasn't done a whole lot. So we are looking for, at this point, it's just a bit of a pullback here. Price has just kind of gone sideways, hasn't done much. We do have monetary policy meeting minutes coming out from Australia. So the tone of the central bank will have a big impact, right? So keep that in mind. But as we are discussing the US crosses, it will be, we have to keep in mind the FOMC on Wednesday, and that can change everything across the board, because if they are hawkish, all the US dollar crosses could drop. However, if they are more dovish, they're negative, or they're not as confident about the economy or the geopolitical situation, that could cause the US dollar to drop, which means all the US dollar crosses could go up against the US dollar. So that's a big thing to keep in mind. So bearing that in mind, right now I am looking for, so this is still bullish. It's been going up for the last few weeks. This is looks like a bit of a pullback. It's not an engulfing candle. So at this point, we could see the price pull back into this 79.20 level and then go back towards the high here. So the target, so we are bullish, and the target will be 0.8120. And once the price breaks above that, so let's say Fed is not as hawkish, they're dovish, then we may see a break above, pull back into this high here, and then another move to the upside. So the two targets to the upside would be 81.20 and then 8300. So this is the next one to the upside here. Now, we do have Australian Reserve Bank of Australia as well. If they are negative, then we could see this one go lower. So in that case, let's put a downward target here as well. This will be the downward target, 0.7800. So if they're negative, we're looking for price to drop. So this one, normally, overall, we are bullish on this, except the only caveat is if the Reserve Bank of Australia comes out dovish, then this could go down. New Zealand, let's take a look here. New Zealand has given us a bullish signal here. So New Zealand looking for price to go up higher. And right now, the target will be 74.80 level, this one, this pin here. That will be our target to the upside, but just keep in mind, New Zealand dollar is one of those pairs crosses that has been trading sideways for a few weeks now. So 1, 2, 3, 4, 5 weeks, it's stayed in this range. So it's very important to first wait for the break of the range, because what could happen is price could just come into the top of the range here, which is 73.40 level. See how it hasn't broken that level? It could just bounce off to the downside towards the bottom of the range. So that's something we'll have to keep in mind. So first we need to see a break of the range, but based on the weekly close here, this looks a bit bullish, but I would still wait for the price to break above, pull back into the top of that range, and then look for a bullish buy here. But until such time, we have to just wait and sit aside till the range is broken. If the range is not broken, then it can just bounce off of 73.40, and then it could go back into the bottom of the range, towards the bottom of the range. So keep that in mind. So 73.40 will be a key level for us to watch. Once the price breaks above, we're looking for 74.80 to the upside. Dollar CAD here. Dollar CAD, we are seeing a bit of a retracement here. So in this case, a very small move to the upside, not a huge deal here. Still looking for a bearish move on this one. So we have seen a pull back into this previous level. So this is the similar scenario to British pound. So we have had a big move up. We could see a retracement of that and then a continuation. So in this case, this is an important level, a 1.2220 level. Now, if the price holds above this level, we could see a retracement all the way up into 124.20. So 122.20 is a key level. So the way we could see this play out, two scenarios here. If the US dollar is weak, then we're just looking for another move to the downside. So we've seen a bit of a pullback, looking for continuation to the next target here, 1.1940 level or 50 level here. We are coming into support levels here. So this is a big support level. We haven't been here since May of or March of 2015. So once the price comes here, we are looking for price to bounce off. So there may be buyers sitting over here. So keep that in mind. So this is the first scenario that I am looking for, price to pull back into 122.20 and then do another drop to the bottom. So basically continuation of this downward trend is my first scenario. The second scenario is, let's say Fed comes in hawkish. In that case, we could see a pullback all the way into 124.20 level and do one of these. So the pullback basically, so in that case, we're looking for price to move up in that case. So this will be the target in that, in the case that Fed comes in positive. Fed doesn't generally come in positive, but you know, central banks have their own agenda and we'll see how that plays out. So if that Fed is positive, then we're looking for pullback all the way into 124.20. My first scenario will be more of a push to the downside, but that will be a second case scenario. Swiss franc here. Swiss franc is still range bound. So as we can see from the daily here, price has sort of traded in this bigger range, for some time here. So this is the range that we have been trading in. Price did go and test the highs here. It has pulled back since in terms of our daily. So this is where we are. I'm going to still trade this as a range bound market. So our target to the upside here is 1.1520. So once the price comes into that level, I'm looking for price to push out of that level, push down from that level, and looking for price to go lower. And the first target would be 1.1350. So just looking for price to push down. So if we look at the daily, looks like price is bouncing off of that. So I'm looking for the move to continue down into 1.1350 level. So in this case, just again, a range bound move towards the bottom of the range here. Pound Swiss has gone all the way up. So looking at the weekly candle close, as we can see, it's gone way out into this area here. So these pins looks very bullish, looking for price to move up higher, and the target would be 132.80 level, which is this area right about here. So that will be our target to the upside. In this one, since it has been such a big move, we're looking for price to pull back a little. So 129.20 looks like a good pullback level. So the move that we're looking for is price to pull back into 129.20 level and then a further move to the upside into 132.80-ish level. So that is bullish. Dollar Swiss franc here from the weekly here, as we can see, this is again another range bound market. It could go a little higher here, but this is what price has been doing for the last, so this is a weekly chart, 1, 2, 3, 4, 5 weeks. Price has been trading in this range. So we are going to trade this as a range bound as well, just like Euro Swiss here. Price has bounced off of this level repeatedly. We had a bearish candle pin bar here, and there was a follow through on that. As a result, so we're looking for continued move towards the bottom of the range again. This is where we are, so looking for price to bounce back towards 0.9420 level, which is the bottom of the range. So range bound move here. Price goes up into 0.9700. I'm looking for price to bounce down. Goes into 0.9420. I'm looking for price to bounce back up. So that is range bound as well. Pound yen, all the pound crosses have been very, very bullish, and we are looking for a further move to the upside here. This is where we currently are, and the next target could be, or 157.80 looks like a good target. It could go up higher into 161.50, but prior to that, because it has been such a big move, we could see a pullback into 148. So I would keep that in mind. That is a good level. I like that level for a potential buy if the price stays above this level. It looks good. And then I'll be looking for price to go test the high again at 151.67 level here, and then go higher into 157.80. So 157.80 is the target to the upside. Euro yen has been very bullish as well. Like I said, when they directly shoot towards Japan, it is bad for Japan, because they were talking, North Korea was talking about sinking Japan. They don't need Japan anymore. So they were talking about how they're going to sink them in the ocean. So those kind of direct threats are bad for Japanese yen. But generally, when there is geopolitical risk in the market, risk aversion sets in, and the safe haven currencies like Swiss franc, Japanese yen, gold, these assets tend to go up as a result, which means these crosses will drop. But if they're going to shoot directly at Japan, that increases the risk for Japan. As a result of that, Japanese yen will drop and other crosses will go up. So based on the technicals here, we're looking for a further move to the upside. In this case, the pullback level will be 131.60. So looking for price to pull back a bit and then move further up into 134.80 area, which is the next level here. So this is bullish. Aussie yen here, we are into the highs here. So we do need to see a break of the highs before the price continues higher. So this is bullish at this point. So the next target is right there, so 90.75, but a break of 89.50 will be important before we can look at 90.75 target here. So we need to see a break here, because it could go into the highs and then bounce back down. So that's important. But overall, we are bullish on Aussie yen as well. So let's take a look at New Zealand yen. New Zealand yen, big bullish move to the upside. So we're looking for a further move up. And the target here is 82.00. So that will be the target. Pullback level 80.36, or even slightly lower here. 80.20 looks like a good pullback level, and then a further move to the upside into 82.00. Dollar yen, the last one here. Actually, we'll look at euro pound here as well. So this one, quite bullish, looking for a further move to the upside into 112.38 level, and pullback level 109.93, so 110 will be a good pullback level for a further move to the upside. Euro pound, last one. British pound has been very, very positive. As a result, euro pound has been very bearish. So this one has had a big move down. So we are bearish on this one, but we could see a substantial pullback. So into 88.80 level, this one would be a good pullback level. So looking for price to push up a bit and then do another drop. So first target would be 87.20, and then we are looking for a further move down, and the target, the next one, 86.12, so 8600 level. So first target would be 87.20 and then 8600, two targets to the downside. Gold, let's take a look at gold. Oh yeah, SB, you mentioned debt ceiling. So that's another issue that's facing the U.S. right now. They've temporarily raised the debt ceiling. So the whole issue about debt ceiling is that in order to be able to borrow more money, so the government right now, they're not generating enough revenues from taxes and other things like that in order to pay their expenses. So they need to borrow more money, and government tends to do that in terms of selling bonds and stuff like that. So when they hit the debt ceiling, that means the maximum credit they can borrow. That's the debt ceiling. So now they have hit the debt ceiling again. They've temporarily raised it. So this issue was, again, we talked about this, I think, last time. This was an issue under Obama's time, and now we are back at that level. So we have maxed out, US has maxed out its credit. So what happens is basically if the debt ceiling is not raised, you can't pay your expenses, you can't pay government employees and everything else, make interest payments and things like that. So they have to raise the debt ceiling. The issue is that I think Trump wants certain things to go in with that, with the whole package, as opposed to just focusing on the main thing. I think the border wall and things like that are sort of playing a role in this. So we'll see. So for now, the whole issue has been pushed into December. So it's not a main issue at this point in time, but I would recommend just kind of keeping an eye to see how the market talks about. So looking at Bloomberg and just keeping an eye on Reuters and things like that to see how the market is talking about these things, because they are important. I am not concerned that they won't raise the debt ceiling, because they do have the majority. So as a result, I am pretty confident that the debt ceiling will be raised, but I'm just concerned about these other things that may get tied up with it. So that will be where we'll have to keep our ears to the news feeds and stuff like that. Okay, gold bearish here. And as long as the risk is kind of out of the market, we are looking for a further move to the downside, and the target will be 1302.50 here to the downside. So this is a nice support and resistance level for it. So I'm looking for price to come down into this level. Looks bearish at the moment. Yeah, so we're kind of looking at it's making its way down, so looks bearish. But we did talk about this. We were into this, almost into the resistance levels, and when price is into such levels, generally we see a retracement, and North Korea market is sort of brushing that whole issue off. If that North Korea situation becomes a threat again, this could go back up, just like the safe haven currencies we talked about. This is a safe haven asset as well. In that case, the market could do a complete reversal. But based on the technicals alone here, this looks bearish, and looking for price to come down into 1302.50, and then further down into 1291.70 level here. So looking for a bearish move on gold. All right, any other questions before we call it a wrap? Not seeing any questions, so I guess that is it. So you guys have a wonderful trading week, and I will see you next time. Okay, bye for now, everyone.